Welcome back. As promised, let's invite the management of Neogen Chemicals. They recently reported the Q3 numbers. It was a good quarter. The company's top-line growth was 23%. Margins expanded 500 basis points on a year-on-year basis. We have with us Harin Kanani, Managing Director at Neogen Chemicals, joining in on the show. Thank you very much, Mr. Kanani, for joining in. This is Reema here. So you've managed a top-line growth of 22-23% on a consolidated basis, despite a challenging pricing environment. So can you tell us the breakup between volume and pricing? To what extent are prices under pressure? And when do you expect a recovery in the prices?
So thank you for having me. Yes, in this quarter, we had more than 20% growth in our revenue. And we had more than, if you look even at 9-month numbers, because that's a better comparison, because last year Q3 was a bit off because of lithium price movements. So even our EBITDA was up almost 35% and PBT was up almost 70%. Mainly what these numbers indicate is, that last year the chemical industry and Neogen also went through a bit of a pain because the industries was not doing well. Our basic raw material, lithium and bromine, the prices of those, which are commodities, was going down significantly. Those have leveled off now, and they are still at below the historical level. So anywhere between 6 months to a year, people expect, because at this levels they can't sustain long. So we will basically see a growth we'll see the correction happening and they come back to normal level. And if this was not there, our top line would have grown almost 30%, in line with what you are seeing, almost 35% EBITDA. So Neogen has an ability to basically pass on the benefits, pass on the price increase in commodities to the customers. So sometimes our top line doesn't reflect it, but the EBITDA gives a better indicator of what's happening. So I think this is where we are. And I think the main contributors are improvements in pharma, improvement in our CSM business, and the organolithium business, which we have acquired, which is now also merged into Neogen. So all this together has contributed to the growth. The battery materials have just started contributing, but it will take a little bit more while for it to start contributing in a meaningful way.
So you're saying, in a way, the realization impact, the negative impact due to realizations was about 7%. You would have done 23% if the pricing environment was normal, and now you've done 23%.
Yes. So if the pricing environment was lower, actually the volume growth is almost 30%. So if you go to our earnings presentation, it has the exact numbers, but it would have been almost 30%.
And so for 9 months, you've done 17% top line growth. What are you likely to end the year with?
So we are looking at a number somewhere between 800 to 850 crores. So you can see we have a quarter-on-quarter momentum. Our quarter-on-quarter performance has been improving for last 3 quarters, and Q4 is always a strong quarter for us. We are also seeing good order books. So we expect to end even further improvement over our Q2 number, our Q3 numbers. And that will be historically the highest revenue which we would have quarterly revenue since the beginning of Neogen.
Mr. Kanani, 800 to 850 is the kind of top line growth projection you've given for FY25. FY26, yes. We understand that you've given close to 950 to 1,000 crore of top line growth, guidance to the street, within which we understand that there will be a 200 to 250 crore component as far as the battery chemical business is concerned. So what is the growth that you've seen over there? Do you already have commitments from customers in that particular space? And what are the kind of growth targets that you have in that particular vertical?
Yeah, so sorry, I'll have to correct a little bit. 950 to 1,000 crore is just the base business growth revenues.
Okay. So
the battery would be on... Yeah, battery would be on top of that. And in yesterday's conference call, we've said, we are targeting a revenue between 300 to 500. So it's a little bit bigger window just because, India electrolyte, India battery manufacturing is just coming online. So as you can understand, when our customers are coming online, it's a little bit difficult to predict exact numbers that we can have. Also, we are getting approval from international customers, and we have a brownfield expansion coming online and a greenfield. So with a lot of variability in the battery business, we are giving a bigger window of 300 to 500 crores. And for our base business, we are looking at 950 to 1,000 crore kind of revenue on full utilization of capacities, and little increase in capacity on our organolithium business. In terms of your question about what visibilities we have, so we have been working with all the Indian cell manufacturers who are planning to make ACC cells some of which also have a PLI benefit, so they want to work domestically. So with these customers, we've been working for last 2-3 years, going through several phases of approval. So as their demand picks up, we expect a very significant share out there. And internationally also, we are working with 4 to 5 companies for taking care of their electrolyte salt demand, which is basically right now 95% sourced from China. So there are hardly 3 or 4 players outside China, and we are one of the most competitive sources which can meet the quality better or equal to China and Japan. So that's why there's a very strong demand in the international market as well. Here we have many pricing agreements in place. It's only we have to go through a very rigorous qualification. So once the qualifications comes in, the revenues will start kicking in. So we expect revenues will start kicking in significantly. So, the total capex we are doing in 2 years is 1,500 crore with a visibility of around 2,500 crores in the battery business over the next 3 years. So we are expecting at least 300 to 500 out of that 2,500 coming in next year back on the capacities we have.
FY26, close to 300 to 500 crore is the kind of top line that you expect to come as far as the battery chemical vertical is concerned. Let's now talk about the Bewley Chem business. How did that particular vertical ramp up? What kind of utilization are you seeing over there? We also understand that there are some NCLT approvals that you require in that particular business for corporate restructuring. So where does that stand, and how will the combined entity look like at the end of the approval once it comes through?
So the approval already came through in January. The standalone number you see already, Bewley Chemical is merged into Neogen. So and that business was supposed to operate between 50 to 100 crores kind of revenue potential depending on price of lithium. So on a lower band of lithium price, we should be somewhere closer to 50 crores. And we are already doing more than that. So the capacity utilization also. So last year we had just acquired the business and it was getting stable. But within 5 to 6 quarters now, like Q2 and Q3, we were almost operating at full utilization capacities. And we also received environment clearance where we can increase capacity significantly from Delhi. Now we are waiting local clearances where once we receive that, we will double the capacity in next year with a very limited debottlenecking kind of capex. And we already have a very strong order book for that business. So that's a business where it's not only for pharma, agro, the traditional areas, but it also gets used in semiconductors, specialty rubber kind of applications. So it's also opening, doors into new industries for Neogen. So we're very excited with that, and we'll keep ramping up the business over the next 2 years.
Mr. Kanani, I believe you've said in the past that FY28, FY29 is when all the efforts, all the investments that you've made come to fruition, come together and get completed. Yes. Is that right? So clearly you've laid out the next 5-year plan. By FY28 or FY29, what would the top line of the company look like and the margins of the company?
So all the capex which we are doing today, which we already have in place, which is in our base business, can take us between 1,000 to 1,200 crores. And what we are doing in the battery, what we have announced, which will complete in the next financial year, will give a potential of 2,500 to 2,900, depending on the price of the battery. So overall, if you look at FY28-29, and that basically just depends on how fast the battery manufacturing picks up in India, and how fast, we are able to get, how much market share we are able to get. So based on that, we would be somewhere around 3,500 to 4,000 crore, let's say by FY28 or FY29. And now,
margins?
We are already, so margins, on the base business, we are looking at 18% kind of, 18 plus or minus 1.5%. So basically, as we go full utilization, we are expecting EBITDA to go more closer to around 20%. And for the battery business, the top line can change depending on price of lithium and other materials. So we are basically guiding at a 20% ROC on the investment which we are doing. So that's more like depending on, the price of lithium, it can be varied between 16% to 20% or even higher than 20%, depending on the price of lithium. But let's say on an average, you would see above 18% or 20% kind of an average EBITDA on the normal lithium kind of price.
Thank you so much, Mr. Kanani, for joining us, giving us a sense of the various verticals of the business and the way forward as well.